Hello guys and welcome back, and today we're going to talk about futures contract. So futures in finance is a contract between two parties to buy or to sell an asset for a price agreed upon today, the future price, today's price, with the delivery and payment occurring at a future point, the delivery date. I'll explain what it means. Let's go to finviz.com, our site, and then click to futures right over here. And here we've got that, and here we can see that futures are segregated into several sectors like indices, energies, bonds, softs, metals, meats, grains, and currencies. So there are futures on currency, there are futures on grains, on all these sectors. And let's go to energies, for example, and to take a look at the crude oil, this one. So here's a daily chart of the crude oil. So of course, trading futures is still the directional. When you buy it somewhere over here, you need to price go up to make any money, or if you sell it over here, then you need to price going down. There are months below here, the axis meaning the time and axis meaning the price. But what is the biggest difference in futures between the forex or stock markets? That the future has its delivery date or its lifetime. So somewhere in between the February, right over here, you can trade crude oil futures, but there are delivery dates for each month. Over here you can trade the May future, which is going to expire somewhere over here, or then June futures, which is going to expire here, then July somewhere here. So the expiration month, like July, is happening somewhere between of May. Don't ask me why, this is just happening. So at some point, at any time over here, you can trade either front month future or next month or next 3 months and up to 5 years. And what does delivery date mean? It means that at the expiration date, in the middle of the March, this future do not exist anymore. And if you have a position in futures, then you can get the real delivery, and they will deliver you some crude oil amount at the seaport, and you will have to pay for warehouse holding, or you need to buy it back and sell the next month. So this is called rollover. Or at this point you can buy July futures over here, so any month. So it's up to you. So what's the most important that we need to get from this lecture is that futures trading is directional, just like forex or like stock markets, but the futures has its lifetime, which is limited by its expiration date, and after which this future is no longer exist. This is very valuable information that we need to take into the next lecture, and until that, I'll see you there.